Hello and welcome to KYC. I am Sharad Dubey and company on KYC's radar today is Tamil Nadu Mercantile Bank. Of course, on the back of the earnings, the stock is also buzzing in trade. But the question remains is why we have taken this company in our segment. What does the street actually want to know about the company? Of course, the first question is, will they achieve their high FY27 targets? That is something which we have been looking out for. And of course, the numbers which they have given post their earnings, it looks like there might be a chance of even an upgrade in their overall targets. Let's point out other important questions also which poses here is why the growth expansion plans, where will it be? Will it be the digital space? Will it be the non-Tamil Nadu market space? These are the questions which we will be asking the management as well. And interestingly, will the asset quality numbers improve? That's also a question we will be asking around. And the NIMS bottoming out, that's roughly around 3.9 odd%. Will that trajectory move as well or not? Of course, this is the important number which we had focused on. But let's move on and discuss about what are the key details about the company as well. And then we'll move on to the most important thing, which is the Q2 earnings. And then we'll start our parameter rating. The companies are almost a 104-year-old private old bank in the sector. Pan-India, they're having roughly 600 cities, and I mean to say the branches and the expansion is going on an aggressive way. 12 regional offices across 17 states, and if you put it across, they also have coverage in the union territories as well. And they have, interestingly, a 250 crore fund provisions for COVID as well as ECL emergencies which have come by the RBI. Q2 earnings, that's what the street is actually looking for, and let's just go into it. Decent set of numbers coming in. If you look at it, the asset quality has improved. Lowest GNPA in the last 10 odd years. Cost of funds, we saw a slight decline coming in, and overall there is a decrease in the credit costs, and NIMS, as you have largely pointed out, were largely flat. Numbers, the headline numbers, let's just revise that. Net interest income, not much happening. That's around flattish growth coming in, but provisions, that has come down. That's roughly around 69 odd% degrowth coming in. But the number which has been the talk of the town are the gross GNPAs. That has significantly come down. Net NPA is also coming down. So they have almost achieved the status of the GNPAs of 1%, which they had targeted for FY27. Net profit, not much to share about, and that's not a parameter to actually track also for a bank. Net profit is up around 5 odd%. Some adjustments were definitely there. But the question remains is, this show has a rating parameters. What are those rating parameters? They are very important, and based on that, we will be judging this company. And of course, the management will be also answering our questions as per this show. Income statement, balance sheet, asset quality, return ratios, we have tweaked a bit our parameters because it's a banking company. Share holding, street cred, valuation, and outlook is something which we'll be watching out for. But without further ado, let's start the innings. First one, of course, is the income statement. Largely, we see not much happening here. Net interest income just 8% 3-year CAGR. Operating profit also in single digits. Now, if you're seeing the entire industry going in, you could say the early teens, and the numbers over here, if you look at it, not that appealing. So, and including the provisions numbers, that has actually seen an uptick as well. This is just the FY25 numbers. The Q2 numbers were, of course, definitely on the lower side as well. But net, if I had to give a number, it would be a thumbs down for the company in the initial stage because I was judging the income statements. But from income statements, let's move on to the balance sheet. That's a very important component, especially with the new Basel norms and everything kicking in for the banking space. The metrics, they generally look decent. Not much action actually happening. Gross advances is up almost 10% 3-year CAGR, and deposits on the lower side. That's interesting. That's around 6 odd%. CASA, the management commentary also in the press release was, kind of on a positive side. But net in current levels, I would suggest that what the data we are having, it's a neutral impact. It would be a 0.5 point if I had to give. Asset quality is something very important, which I'd like to point out, and that has been doing really well. We saw that in the Q2 numbers, how nicely it has panned out. But the GNPA numbers, you have a look, it's at around 1.4. It went up in FY24, but then there has been a good reduction, roughly you could say a 19 bips cut happening. Net NPA also, the story remains the same. That means the asset quality is improving, and these small if you say that these small parameters which are there, now once these small banks themselves, their asset quality starts improving, then they become very attractive also for the future growth potential. That's why net the asset quality numbers have been strong, and this quarter itself, if we see, they have actually declared that their asset quality is the best in the last 10 years quarter wise. So I would give a thumbs up when it comes to the asset quality. So currently just revising income statement I have given, you could say a positive, a negative thumbs down coming in, but for balance sheet it's neutral, and for asset quality it's a thumbs up. But apart from this, return ratios is very important, and one by one we will be discussing the return ratios coming in. Not much happening on the yield on loans front. If you look at it, it's actually kind of down by roughly 10 odd %, and it's actually stable here. And the deposit cost, that's roughly ranging between 8.7 to 9 odd %. So not much improvement coming in the first two parameters which I just discussed. NIMS, these are on the higher side and they have been coming down, and roughly 3.9% is something which we are looking at the current levels, and this is expected to stay in the same level. So whether this bottoms out or not, that time will suggest. And right from the presentation and the press release what we saw in the Q2, it doesn't look like when it comes to the NIMS numbers. Income cost, that is also there, it's kind of stable, nothing much happening. But return on assets, that's the most important criteria when you judge a bank. So ROA, that is something which the company is targeting for FY27 at 2 odd %. It hasn't reached it yet, and it's currently actually on the downward path. If you compare that FY23 number with FY25, it is still having a gap of almost 10 bips, and that's a bigger gap when it comes to ROAs. So net, nothing great about the return ratios coming in, and I would be giving a thumbs down when it comes to these companies. Now, interestingly, let's move away from the financials, all the ratios. Now, let's focus on other parameters as well. Shareholding pattern. Shareholding pattern, I will just give a caveat to our viewers that almost 90% plus shareholding is there in the public as well. There is no promoter definition as such. It's 100%, you could say, a free float company. And now, interestingly, there hasn't been much changes. That's why we have not put that in graphics. But FIs and DIs, that is very important. And you see, FIs have remained kind of stable at around 5 odd %, and DIs also 2 odd %. Actually, there has been a decrease. If you see the numbers, the DI numbers, that has actually come down as well. And this FY23 data, it was at 5 odd %, and that has come down to 2%. So I would be giving for institutional participation either lack of it or very less participation coming in this counter. So I would be giving a thumbs down to this as well. Street cred, not much returns given to investors as well. Not that famous and discussed also in the social circles, but the stock itself, look at it, not much happening for the stock. Of course, last 1 month there was a performance, but we saw most of the banks rallying as well. So there was nothing superlative performance about the bank. But in the details, when I went for the 3 months, 6 month, 1 year, nothing much happening, everything in single digit. That means the street cred is still on the lower side. So I would be giving a thumbs down for this as well. So this is the entire picture, coming up for the street cred as well. And valuations, that's also something to look out for. Not much analyst coverage. I think there's only one domestic broking house which is actually covering TN Mercantile Bank. But apart from that, as per our calculations, we took a trailing 12-month price to book ratio. And there is a reason why the street is not giving premium to this bank. We have seen a good run up in other banks happening, especially the mid and small cap, the way acquisitions are happening or a foreign interest is coming. But that second order effect is not coming to these banks. TN Mercantile's average valuation is coming at almost 0.7 times its price to book ratio. While we compare it with peers, this is of course Bloomberg's peers, all these small and mid cap banks. Some are private, some are PSU banks, but net they are still trading at a 50% discount. That's almost 1.4 times. So that's the question is, if all the banks are rising up, why is this company trading at a, you could say, a discount, and that also 50% to its peers? So that's a question, arises. But there's another way to look at it as well. Like, this company is still valuable. That means there is a lot of value on the table as well. And if the operational parameters are improving, which was there in Q2, and management commentary has been showing a good strength in the day's trade also, the stock has moved a lot positively, which had actually compared to the last year itself, the move has been on a bigger side. I would suggest that the valuations are very comfortable for this company, and because of that, there will be a thumbs up being given for this second last parameter which we are tracking. So we spoke about valuations and street cred and shareholding, which were of course the non-financial numbers, but there's a last but not the least. It is the outlook. The outlook is very important for the bank, and because of that, the street is giving a bit of premium and a catch up to other banks as well. It's the lowest GNP in last 10 years. Strategic innovations, while reading the investor presentation, two things struck my eyes: transaction business and elite service. These are niche high margin businesses where the commentary is very important to look at. And the two numbers which is stand out, FY27 targeting 2% ROA, still below that current level. 600 branch networks is current number and 700 is the target. So it looks achievable as management stance suggests, and the GNPA that's expected to sustain at 1%. Not much changes happening here. But net, the outlook is why the street is giving a premium in the day's trade as well. Today's stock is up. But let's just check out the rating parameters, how important this is. And of course, the ratings, first of all, if you would like to point out the income statement, not much happening. Balance sheet, it's decent. So we have given a neutral rating. Asset quality, that is an important factor to watch out. They have done well. Return ratios below subpar when it comes to the overall bank and the industry as well. Shareholding, not much happening. Actually, the institutional participation is coming down. And street cred, nothing much returns coming to the investors as well. And because of that, valuation becomes attractive, and that's why I've given a thumbs up. And lastly, the outlook. That is something which the street is actually getting bullish on. But net, still it's on the lower side. Currently, I'm giving a 3.5 out of 8 when it comes to the overall ratings in the KYC segment. But interestingly, of course, this is the current situation. In the future also, we have, of course, taken in as well. But to understand more about the future, we also had a conversation with Salee S Nair, the MD and the CFO of the bank. And he'll give us entire details about the entire setup of how the earnings had actually panned out and what lies ahead of the street. I just want to get into much more details about it. Largely, the street has factored in decent set of numbers coming in. Asset quality has improved in its lowest GNPA in the last 10 years. Now, the first question is, your Q2 update, what was the important operational parameters which actually stood out? And of course, we also want to know that will this lower GNPA ratios continue going ahead?
What stood out, first, of course, thank you, Sharath. Thanks for having me on the show. What stood out or what is standing out is actually not the GNPA. Of course, you did mention the GNPA is 1.01%. But this quarter's highlight is actually the growth. The growth that we have revived and is reviving. I think going forward that you will see what I am stating today sort of pan out and play out. The growth is at 11.4% in the quarter. The overall total business growth is at 11.40%. And the deposits, which was a concern for many in the past, is up 12.32%. So that's a number that we are fairly proud of, and that you will see accelerating in the coming quarters. And again, the CASA, again a concern for the industry and concern specifically for us, is up 9.30%. And in fact, from the 31st of March, the CASA share has gone up 92 basis, and in the quarter itself, it is up 58 basis. So advanced growth, again, the momentum is picking up. So it is the growth that is the highlight of the quarter. Yes, GNPA, you are answering your earlier question about GNPA. 1.01%, yes, that will be continue to trend down. We are anticipating it to be lower in the next quarter and the coming quarters.
Well, yes, that's very interesting about it. One more question is there on the NIMS front in the Q2 numbers. They were largely flat, which I saw the numbers. It's coming at flat at 3.8% on a sequential basis. Will this bottom out going ahead, like what the industry peers have been talking about, or is there any other commentary coming from the management?
You are right. The NIM is actually flat, I think, from 3.84% to 3.83%. And of course, it also has a direct impact on our consequential impact on our deposit portfolio. Our deposit portfolio is oriented towards 1 to 2 year bucket, which on a fixed rate, which typically takes about 3 quarters at least to sort of give us the results. And I think that's the reason why it continues to be flat. But going forward, I think we are looking at about 3.85% for plus or minus 5% in the remaining 2 quarters for the current year. That's where it is. I think NIM for us is not a worry. I think it's still flat, but 3.85% is what we will be picking it up even going forward. We don't expect it to go down further.
Well, that's very interesting, and of course the FY27 outlook that has been given by the company as well earlier, which I would like to target. They're targeting a 2% ROA, 700 branch network, and GNPA likely to sustain near the 1%. But this quarter itself, you see the numbers on the growth front have been on the higher side. Are you looking at upgrading the FY27 guidance, or will you stick by what you had said earlier?
On the growth guidance, we will be a little more aggressive in the sense that I did mention that the deposit growth will be in the 11 to 12% range for the current year. I'll take that next year a little later. 11 to 12%, and I'm confident that the deposit growth in the current year will be in the 12 to 13% in the current year, and the CASA. And I'm hoping that will be in the 12% range, thereabouts. And the advances would be in the 14 to 15% range. So that's where I think the momentum is picking up. We can see it happening. When I look at the numbers on a monthly basis itself, I can see the momentum happening. And that's where we are likely to see the current year close. Like I said, 14 to 15% on the advances and 12 to 13% on the deposits. And the next year, I think we will be well over 13% on the deposits. Particularly, we are seeing momentum happening in the CASA. I think the CASA share will sort of revive and start moving up. I think some of it that we lost, I think we will be able to regain next year. And it will be certainly 15 to 18% on the advances. That's where I see it.
Well, that's pretty interesting regarding that. And one more question is there, Salee, that the growth expansion plans, that has also, the street has kept your stock under the scanner. And now the interest is coming back, especially on your non-Tamil Nadu markets and their expansion plans. And the street wants to know, what are your growth plans? What are the additions happening in the branches? I know that it's largely a physical-led business, but a digital angle is also coming. We'll get to that in the next question. But right now, my question is, what's your expansion plans in the non-Tamil Nadu markets?
See, I should have stated earlier upfront that we have actually opened 600 branches, right? That's one of the highlights of the quarter. Anyway, 600, that's strong we are. And not only we have opened 22 branches so far, we have also laid the foundation for opening another 36 branches in the remaining part of the year. And 12 of that is going to come from outside Tamil Nadu. So typically when we close the year, 27%, we were about quarter of non-Tamil Nadu branches. I think we'll be somewhere around 27% by the year end. And that over a period of 3 years, we want to take it to at least 35%. So some of the branches that will hereafter be opened would be coming from outside Tamil Nadu. In fact, not just the branches, we are also on a recruitment drive to staff them with people, locally connected people outside Tamil Nadu, so that the resource also has got a cultural and a local connect. So that simultaneously is on. So branches are being opened, the HR strategy is also being pursued to staff them. Yeah.
Hello, pretty interesting. Nair sir, one more query is coming in. I was reading the investor presentation and two important things came into my eyes. The first is transaction business and second is elite service business. Could you just explain these two new segments? I'm assuming these are a high margin business, but very niche in development stage. What are the strategic plans, building up here? Could you just explain us and give us a glimpse into the future?
transaction banking business is what everyone knows is the transaction banking business, right? It is focused on the current accounts. I think we were pretty strong in the current accounts a few years back. We want to get that mojo back, So essentially it is focused on the current accounts, it is focused on the task accounts, the government accounts, and the government sector, and the tasks, like I said. So this is something, we have put in place relationship managers across some of our strategy branches, and getting the local mercantile population back, attracting them back into the fold, and that you can see the result coming out in the CASA share, right? As I mentioned earlier, in the 6 months we have recouped CASA share to the extent of 92 basis points. And in the quarter itself, we have done 58 basis points of up in the CASA share. And as regards the elite services group, now that's something that we are trying to ring fence some of our larger deposit liability customers, providing them all kinds of services, including doorstep banking. So that's something that again we have chosen a few branches. I think 38 of the branches we have chosen to have this in place in the phase one. That I think that is also taking roots. And again, let me tell you, these two initiatives are where we see the deposits, reviving, and we have reached where we are, which is 12.34%.
Well, that's very interesting, Nair sir. But I have an industry-specific question for you, and we have seen over the last, you could say, 3 to 6 odd months, there have been so much action from the international players in the BFSI space, where they are either taking stake, be it the unlisted space, be it the listed space, and even the government himself, they are trying to get the foreign ownership up as well, or even there's a JV or tie-ups are happening. Are there any JV tie-ups or any interest from foreign capital looking like for Tamil Nadu Mercantile Bank as well, or are you just looking forward for just JVs also for international expansion? Because I am seeing even in the smaller banks also there are talks happening for foreign interest and foreign capital coming in.
Agree, Sharad. There's a lot of action happening in the market, in the industry, because of course the consolidation is the name of the game, and the government certainly wants at least a couple of banks to be in the top 20 going forward to push the Vikasit Bharat agenda. But as far as Tamil Nadu Mercantile Bank is concerned, there is no talk at the moment of any kind of foreign interest or foreign participation. But nothing can be ruled out going forward.
Nothing can be ruled out forward. So that's a very important statement actually coming in, and that was the question I had asked the management, and Salee sir has stated that right now there is of course no foreign interest coming in, but nothing can be ruled out. So that's a very important open-ended statement coming from the management as well. But interestingly, we did the entire KYC setup, and I would just like to revise in case our viewers have just seen the interviews and who just logged in the middle of the show, that we had done the almost 8 parameters coming in the show. And overall, let's see how the numbers we have given. Income statement, largely we have given a negative kind of a review coming in because their CAGR growth of the most of the parameters were on the negative side if you compare it with the industry names. Over their balance sheet itself, not much there, to be honest, but not an explosive growth also coming in, but a neutral impact coming in. But the star of the show today is asset quality. That has done well even in the earnings in Q2 numbers also. If you see, we have seen a good jump coming in the asset quality. That ratio of the GNP ratio talking about, that's coming in at 1% odd. That's why a thumbs up, the first thumbs up was given. Fourth one, return ratios, not much happening here as well, and that is why we could see that our overall rating also got impacted. This was the first set of numbers or parameters which we're talking about. Shareholding, not much there, 90% plus float is with the public, but the institutions, they have been reducing their stake, and that is why especially the DIs actually grown a concern for us as well. Street credit, not much returns coming in for the investors, be it the 1 year specific, 6 month, 3 month, you name it, and it's on the single digit growth side, and today itself also seeing a slight positive up move as well. Valuations very attractive, it's almost 50% discount coming into their Bloomberg peer average which I have taken, and the number stands at 0.7 times only on a trailing price to book ratio. And lastly, the outlook, that is where the street is bullish on, especially on their FY27 numbers, and chances are there that there might be an upgrade also coming in their overall outlook. But net, the company needs to do a little bit of more homework. It's almost 3.5 out of 8. That's the final KYC rating which we are giving. So we have given you a 360-degree coverage for this untracked stock. We got the management for you and the important commentary as well. But that's it for today, and thank you very much for tuning into KYC only on NDTV Profit.